And welcome to the Trading Zone. I'm Joe Teague. Brian, how are you doing?
Yeah, I'm Brian Stutland, Portfolio Manager, Equity Armor Investments. Doing all right. Rough weekend for my Bears, but an excellent one for your
You
Lions.
sound a little depressed from the Bears.
Yeah, we're about as bad as you can possibly get. But
I may look tired, but I also might sound a little excited for my Lions.
yeah.
How about me
Um,
now?
so yeah, but other than football, I mean, just looking at markets, obviously exciting week last week. The election results have really put a spin on certain areas of the market that we're going to talk about on our show today. Certainly areas of cryptocurrency to, those who are backing Trump and feeling that Trump bump these last few days. And obviously the stock market really having quite the run. Should be all kind of interesting. And, I kind of look forward to talking about and digesting, what's in, what's not.
Yeah, we're going to be talking Bitcoin and gold. I think there's going to be a big, difference between exactly what they are, but a lot of similarities too. And I can't wait to get into all that. But there's a lot of other stuff going on in the world. There's been maybe some pricing in of some of the good news, maybe some uncertainty out there lingering. So yeah, I think there's still a lot of trading going on. There's still a lot of action going on. It's just more exciting than it ever for me, Brian.
Yeah. All right, so let's get into it. I'm Brian Stutland here with my colleague Joe Teague. We're here on the Trading Zone every week, Monday, 1 p.m. Eastern. Tune in live. Watch us on YouTube afterwards at Equity Armor. And you got to check us out here because we have a market now that is trending higher. It had a huge bump up from the elections. Joe, what do you make of all that?
Yeah, well, I'm excited to talk about the market. It had a really big run up. We saw a little bit of FOMO going on, and at some point that's going to run out, but it hasn't really run out yet. Some nice rotation today. I actually really like seeing what we're seeing out of the regional banks today. Big move from them. That's a sign of strength of the economy for me. Right now, before the new administration comes in, this is the headlines we're getting out of the current trade with China. How is that going to change next year? Is that going to change the inflationary component of it all? We're going to talk about that with our Bitcoin and gold discussion for sure, Brian. But in reality, we just have the election reality. It's continuing. People are just trying to figure out, maybe chasing some of these big returns, which we've seen in some names like Tesla. And we're also going to talk about Palantir. That's a name we're going to trade at the end of the show, Brian. We're going to talk about Palantir, a name we've been talking about all year long. We've been riding it, watching it race higher from the mid-teens all the way up to above 60 where it is right now. So just an incredible story. I want to talk about their earnings. I want to talk about how to trade it for me going forward. So that's what we'll be talking about today.
Yeah, and I think the Doge Elon Musk effect is what I think actually is going to happen is people are saying, oh, Musk is going to get all these favors and this and that or whatever. I think what's going to happen is XAI and Palantir, which are AI generative artificial intelligence, is going to take over a lot of government jobs. And I think that, the Doge are removing jobs. I think the reason why Palantir is going up so much, Tesla moving up so much is their AI tools are going to be used in the government to basically eliminate jobs, make it more efficient. And I think they're getting a real bump up from potentially that materializing.
Well, speaking of inflation, Brian, we got some big inflation data points this week. We got the CPI Wednesday, PPI Thursday. Don't sleep on these big earnings reports too. We got Home Depot, AMAT, Disney, Cisco. So it's going to be a busy week, and it's going to be a fun one.
Yeah, and I think like an HD and a Cisco, sort of that Cisco old tech, Home Depot, more large cap value. We're seeing large cap value being, very successful over the last few trading days here, outperforming the rest of the market. Maybe that's, a little bit of an inflationary play there. So should be something interesting to watch on their earnings front, although maybe more on their guidance rather than their, post earnings.
Let's take a look into the volatility zone here, Brian. As you all know, we are former options market makers. Wealth and knowledge when it comes to volatility, a real specialty when it comes to VIX. trading and options. Brian, early adapter to the VIX. This is the SKU index. We look at this every week. If you're new to our show, the SKU index measures the difference in price between the 25 delta put and the 25 delta call in the S&P 500. The higher this index, the more volatility people are expecting to the downside. This highly correlates to the VIX. We kind of use this as a bit of a forward indicator for volatility trading. This is something we track very closely. So here we are on the 5-year time frame. You can see, boy, did we come off in a hurry after the election. That was pretty nasty.
Yeah, and what I make of this is basically call buying occurring. Occurring, right? Like, people basically chasing this market. You mentioned earlier in the show, FOMO, fear of missing out, and certainly that market chase is manifesting itself in people trying to buy calls, use leverage to play to the upside. And I think that's why you've seen this skew dramatically shift, almost down to the point where we were at the beginning of 2024, which is amazing. So very bullish sentiment going on in the S&P 500.
Yeah, let's take a look at a shorter time frame here, though. You can see, at the start of August, we really, in a big way, broke out of the downtrend, really lasting to COVID. We had a downtrend in volatility. We broke out, made a higher high. So that led us to this higher level here. The question is, are we going to remain in this higher level, or we're going to come back down to the lower level? I think we're getting pretty close to the lower end of the range here for volatility. We'll wait and see. A lot of call buying. At some point, that call buying leads to people getting offside, chasing the rally. Then the selling of the calls happens, and that's when you start to see a little bit of a return to the mean when it comes to volatility trading.
Yeah. So, Joe, anything in the VIX futures curve here that you're particularly seeing that's an indication that volatility picks back up, or are we just headed for good times?
Yeah. Well, right now we're at the low point. The low point here. We got the current week. Just way lower than the rest of our data points here. So yes, we were expecting this. Volatility was going to come down after the election, but wow, it was fast, and it was all at once. So my hunch is even though December and January kind of low spots of the year volatility, especially December, you start to pick up in January again into February. My hunch is that we're going to see this normalize and start picking higher. But I don't know. What's your take here?
Yeah, I think, if you look at just mean reversion, if you look at 1 month ago and 2 months ago, where volatility VIX futures were trading significantly higher, and I know that was going into the election, but I think there will be some sort of, carpet shakeout that sort of pushes these futures back towards that little area. Maybe could there be a little bit more downside to go for VIX futures? Yeah, but I think the mean reversion takes effect at some point before the end of the year where we get a little volatility bump up.
Well, maybe we're at a decent spot for a carpet shakeout here, Brian. Let's bring up the S&P 2-year. This is something we've been talking about. We've been pointing this out all year long. I love this trend line. It almost felt like we need to throw this away, but it still seems very relevant here. We're just trying to crack back into this upper tier here, Brian. We're having some trouble lately. I'd love to see us in here and, testing the higher bound of this range, but we just have not really decisively done so yet.
Yeah, every time it sort of bounces, hits that low end of the green channel, we get a little bit of a sell-off. So maybe we are due for a sell-off. Maybe that little carpet shake and pullback is coming. We have third week November regular expiration coming up on Friday. 6,000 is a big number, maybe for a pin. Maybe things shake out below that, headed into this week. Yeah,
we had the catalyst with the election that really drove us to this all-time highs. Great. We got the CPI this week, some earnings. Maybe just some momentum. I think that's what the market will be relying on to get that next level. There's all sorts of news events that could be go the other way. We maybe pricing in some of the tax cuts, maybe pricing in some of the deregulation happening now. How do you price in some of the inflation or some of the tariffs, or how do you price those in? So I think there might be some push and pull.
Yeah, for sure. So looking further on, at our next chart here, we're looking at the NASDAQ. That has broken back above that sort of channel range. So we'll see if that holds. Very bullish, obviously driven by names like Tesla, pushing that index higher, Amazon having a good week as well. So we'll see if some of these other names that are all sort of the AI play that we've been talking about start to now take over. People feel good about it. Semiconductors, look at there again, very bullish move, maybe a little cup and handle formation here, Joe. What do you think?
Yeah, I'd love to see this make this higher high here, but still we didn't really get the higher high like the other indexes. So great. I mean, this was looking the worst heading into the election, Brian. It's great that it's gone the right way here. Still needs some confirmation. If we do get this higher high, I think the S&P can test higher into that range.
Yeah.
So let's bring it into our big story of the day. Just what a chart for Bitcoin. Congratulations to the hodlers out there. You must be just overjoyed with yourself. Just way to go. Way to hold Bitcoin. And gold, since the election's kind of gone the other way. This is a very interesting story here. We got one, two things obviously going higher this year. But since the election, one just breaking out, going parabolic, the other pulling back. I think there's a lot to be said about that. I think long story short, I think you just have to say that while these are two indexes or two currencies really, which are an inflationary hedge, but we have to consider them differently within that basket of inflationary hedges. Gold is essentially a risk-off inflationary hedge, and Bitcoin is essentially a risk-on inflationary hedge, if that makes sense. So I expect gold, and we're going to get into this in some more charts here. Gold is going to move with treasuries. So when the treasuries are signaling, hey, growth is going to be good in the US, that's kind of saying, hey, risk on. You might not want to own Bitcoin, or you might want to own gold at that point. You want to own Bitcoin at that time. When the reverse is happening, of course, you see gold doing much better. Let's just look real quickly here. Gold versus the 2-year yield. Yield here is in black as the yield is going higher. Gold is going lower. I turned it around for you so you can see here, when the yield goes higher, gold goes lower here. And it did quite well when the yield was going lower, of course, but it flipped it around on the most recent Fed meeting. And here we get to the main chart here. This is Bitcoin and gold here, Brian.
Yeah, and I think when you look at this, I mean, you made some really good points about interest rates in gold, right? I think that's tied to more, how's the Fed doing? Where are they going to move rates a couple years down the road? And so gold is much more highly correlated to where 2-year interest rates. It's almost like owning 2-year interest rates with a directional play to that. And when you look at Bitcoin here, both correlated, both have some sort of anti-fiat currency play to it. But Bitcoin is a much more volatile version of gold. If you were to sort of separate the two charts out and look at the movement over the last year and a half, both gone up tremendously. Bitcoin, you could maybe like 10% of your portfolio and get the same sort of effect you would from gold being 100% of your portfolio almost. So almost at that, maybe 5-to-1 or 10-to-1 different level of volatility. So certainly this is an inflationary play, and obviously lots of talk about, Trump and how good that will be for cryptocurrency and whatnot.
Yeah, so this is just, not normalized. This is just their returns. You kind of squeeze them together. We can see they're very correlated. Right now, we got the big risk on sentiment, though. You can see that big divergence. Let's take a look at the past couple of years when you just look at absolute return here, though, Brian.
This is astounding on how much Bitcoin moves up. You said congratulations to the crypto world people. It's really broken out. We obviously had this huge consolidation over the last, 9 months of the year. And then now the breakout happens. It's pushed to new all-time highs, gold trending lower. So again, like I said, I think you can play both on an inflationary world, and gold, you got to hold at a higher percent weight in your portfolio. Bitcoin, you can buy an ETF. There's a handful of them out there that I like, and play it to the upside with a 5 or 10% holding.
Yeah, I mean, this Bitcoin chart really does look great. It had, this expansion period at the start of the year, really nice consolidation period, and then a new expansion period. Like, it's exactly what you want to see from a technical level. I still have my practical, concerns about Bitcoin. For me, it just doesn't. I don't see the practical use of it. Yes, it's a higher value. It's practically great to hold it and then sell it at higher. But what are we going to do with it behind just holding it? Like, how is it really going to be used? I think it's great maybe for people who want to who who see themselves as libertarian, want to keep their money out of banks, want to keep their money away from the government. Sure, that's great, but how are they going to buy things with it? How are they going to use it?
Yeah, I think from a day-to-day perspective, it doesn't make sense from a day-to-day. It's too volatile for daily purchasing back and forth and exchanging of hands for goods and services. But I think what it does is, like I said, you hold this at 5 or 10%. Now I've converted my portfolio essentially to an anti-fiat currency. So if I own Apple, let's say, in my portfolio, I'm technically holding that in the form of US dollars. And if I don't want to hold US dollars, I can sort of go anti-fiat. I'm not saying hold it in terms of Bitcoin, but hold it in terms of anti-fiat currency. I don't want to own US dollars. I own Bitcoin at 5 or 10%. Now I'm technically owning Apple in the form of something else as an investment strategy, and saying the US dollar is not what it once was, or the euro or the yen or wherever you live in the world. And I hold it in a different form. And I think that's how people are playing it.
Yeah. For me, though, when I look at assets, I know currencies are very different, but when I look at assets, when something goes down in value, it becomes a better buy to me. If Apple stock were to go down in value by 20%, I can say, oh, well, now it's a more attractive valuation. I'm getting more for my dollar, more shares for my dollar. But when I see Bitcoin falling, it's not really adding, like it produces the same amount of nothing at 84,000 as it does at 30,000. So like, I'm not really sure exactly. I could see the potential for a bubble in something like Bitcoin because of that very factor.
Sure. All right. Well, we're about 16 minutes into the show already, Joe. We got to talk about the big trade of the day besides getting beyond Bitcoin Gold, although I could probably talk for a couple hours about the two. We have a trade on Palantir, right, Joe? This is really an interesting company, and what are you looking at here?
We do. So Palantir had their earnings recently, and boy, did they blow out. They were kind of trading in a range, looked like the top end of the range would be about 45. They just ripped through there, Brian. They went up to 50 right away. Now we're after the election, and we're up over 60. So it's just been a phenomenal growth. Certainly having connections in high places is very good for Palantir, but also just their absolute behemoth of a company, and their behemoth growth is just amazing for them. So Palantir, we know they have, it's kind of like big data AI. And this is why I love it, because we're kind of at the next evolution of the AI trade. We've been talking about the semis for a year and a half now. That's like the first iteration of the AI trade, like having the servers, having the chips, being able to process all this data. Well, this is the first software component. Like, how am I going to use this AI? How am I going to make it something that's valuable? It's not so valuable to consumers or to retail right now, but it is super valuable to big companies, and especially governments that need this big data and can, amass big data and use it in real time without having a super high-tech training of their employees. So it's really amazing. So for me, I don't even care that they've had fantastic EPS growth. That's great. But the amount of customers are growing so quickly, 40% year over year customer growth is just amazing. And these are big customers, 104 deals closed at $1 million plus. Their operating margins are 39%. That means their existing customers they're making more money off of their existing customers, which just amazing to me. And here's what really separates it and makes it the cream of the crop for me, Brian. Yes, their PE is just ridiculous. You can't even look at that and talk about that right now. But for most growth companies that have high PEs, they're saddled with debt. They're borrowing money, hiring as many people as they can to get as many customers as they can. Palantir has almost $5 billion in cash, so they could take that cash. One of the big ways they add customers, they have these boot camps. They just take that cash, hire 1,000 plus new employees, and ramp up this customer growth from 40% to whatever it is. So I absolutely love this company. I still think it's a buy. Granted, it's very expensive right now. As a holder, maybe right now is the time to do some covered calls. As a new initiation, this is what I'm looking at here, Brian. So this is a stock replacement trade. We've been doing these for some time. Palantir is currently at $61. I want to still participate to the upside, but I don't want to put out $60. I do want to buy it if it falls back. Absolutely, back down to where it settled in after the earnings. So here's how I'm going to set this up, Brian. I'm going to buy the 65.75 call spread in February. I'm going to sell the 50 put. I'm going to collect a dime to do this, Brian. So I'm going to collect some money. Almost the best case for me is if it goes back below 50, so I can buy it down at 50 because it's maybe too expensive here over 60. Otherwise, maybe it goes to 65. That's great too. I'm going to participate to the upside.
Yeah, I like these trades. We structure this a lot of times in our like sort of AI generative portfolio that we do for clients. We have separately managed accounts where we have a bucket of stocks related to the AI world. And we do this sort of structured trade where we're selling the put, using that to finance, buying a call spread, getting a free shot at the upside with the caveat that we would have to own the stock at that lower strike price, but mitigating our cost to this option structured trade. And, you look at the breakout here. Yeah, it gets back to 50. Now that's an area where this is the top end of the breakout channel, probably acts as support. So, Joe's structuring this trade with some technical basis behind it. It's not just blind picking strikes. I think you want to look at areas where, if you sell a put, you have to own the stock, obviously. And you probably don't want to own the stock at the most volatile of times. So you have to look at maybe some of the technicals here. Joe's looking at that $50 level, but still getting the upside participation for the next few months. And look, if it goes from 65 to 75, that's a $10 return on your money on a $60 stock. So that's over 10% in just, call it 3 months worth of time, 4 months worth of time. So pretty good annualized rate of return.
Yeah, effectively, I'm looking at this chart and saying I don't want to own it between 60 and 50 because I could just very easily see it falling back down there. I'm hopeful that 50 will become an old area of resistance, new area of support. So that's where I'd be looking to get back into it. But at the same time, like we could see this thing continue higher because it's just got tremendous momentum. This is a kind of like a 5-month chart. If you look at it over the course of a little bit longer, you can really see. I mean, it's just really showing some strength here. We do have another question here from Edward. Thank you very much for the question. What are your thoughts on market participants with this gold Bitcoin divergence? Are we seeing a generation gap here?
I think there is a little bit of a generation gap. Obviously, you see more of the younger generation using cryptocurrency as their inflationary hedge, holding that. And before, I would say in the 1950s, people maybe held gold bars in their basement and said, well, how can we really? I mean, we're not going to make payments with gold bars with each other, but we're going to hold that as an inflationary hedge or an anti-fiat currency. And I think younger generations are doing that. So I think you're seeing that price action movement being a driving force. And that's probably why both of them are pretty highly correlated. Just Bitcoin moving way more volatile of a structured contract than gold typically does.
Yeah. And the risk on component to the Bitcoin just creates that big divergence too. And it's just is skewed to the upside because the market has a tendency to go higher. We've seen more risk on periods since Bitcoin's implementation. So yeah, that's a great point though. Generationally, I wonder if you get your financial news from CNBC, you might own gold. If you get it from Wall Street Bets, you might own Bitcoin. Is that
yeah, that's good. But I think you made one other key point here, though, is that Bitcoin is a risk on inflationary hedge, gold being a risk off. So if I'm more worried about where the economy is going coming up, I might want to hold gold, but I still have some inflationary worries about it. So in other words, stagflation. If I am positive about the market or the economy going higher, but the value of the US dollar decreasing during that moment in time, then I would probably own Bitcoin. And I think you can fluctuate back and forth, not just be a generational, but be a trader with those two types of opinions about the market.
Yeah, that is a great point. I think we'll leave it there for the week, Brian. This was just a great show. I love talking markets. I love talking Bitcoin. I love Palantir also, as everybody knows. So it was a great show. Make sure to catch us every week 1 Eastern here. We are on the Trading Gear Network. This show is sponsored by the MIAX. This is the Trading Zone. I'm Joe Teague, a portfolio manager at Equity Armor Investments.
And I'm Brian Stutland, also portfolio manager at Equity Armor Investments. Make sure you tune in every Monday, 1 p.m. Eastern, here for the Trading Zone in the Tradier Hub, or follow us on YouTube as well, Equity Armor, or on Twitter at Brian Stutland, at Joe Teague. We'll bring you more action next week.
Go Lions.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.